Good evening, traders. It's Monday, October 13th in the evening. Markets are closed and we had a pretty big rally bounce day. We saw on Friday a big sell-off with tariff news causing the stock market to pretty much have a one-day kind of crash, caused chaos across the markets. And today we saw a big gap to the upside and the market ended up closing fairly strong. Now we kind of have gone from some pretty extremes. We went from panic selling and everyone dumping shares on Friday for a very strong close to the downside, not only pushing it oversold for the short-term time frame, but also closed with some strong panic selling. Whenever we get up into these extreme ratios, usually we're going to see the market put a standout bottom or something fairly significant within a couple of days, as long as the trend obviously doesn't change direction. Today we saw the market gap higher and we saw a big move up and we had a full day of FOMO. So everyone was just piling in hand over fist. They all bail out one day, they pile in the next day. And that is the typical kind of market where money is sloshing. It's just fear of losing money to then fear of missing out. It goes back and forth amongst short-term traders who are just way too glued on the short-term charts and they just kind of panic out of positions. Now, very bearish day on Friday. I was expecting the market to gap lower on Monday, today, and then continue to have a little flush down and hopefully rebound. But instead, the market gapped up sharply to the upside and held its ground. But the type of price action today with FOMO, we could very easily, if we look at this 30-minute chart, we could very easily see this market more or less come to the downside. It bounces up with FOMO. When we have FOMO, the market usually is going to move lower. So this could roll over and start a much bigger dip to the downside over the next session or two. So on the daily chart, obviously that would be another couple of bars here, and then it could have another kind of leg to the downside. Fibonacci would give us a target just based on the price action from the lows to the highs. We could see the S&P 500 drop to about 64.40, which based on today's price action is another 3 6/10 to the downside. And that'll, of course, bring us right into this level here where we had this running correction to the upside and then boom, we kind of had that pop and squeeze up. So it'll come right back down into that neutral territory if that is the case. So we are very close to the markets. The trend going from green, which if we take a look at the charts here, we've got this nice green trend up. Same with the QQQ, to turning red and giving us a potential sell signal to get out and protect our capital because something is awry. And we've seen this with the QQQ and how this has unfolded. The market has been making this run higher with a lot of money moving out of the equities market. Really, I think it's the general public driving it up, and we can see that in all the speculative stocks. Very similar to over here, the markets hit all-time highs after big money had been slowly rotating out, dumping their shares into the hands of the average investor, and then something hits and the market sold off. Now here we are again, the market's pushing higher, the general public piling into stocks hand over fist, yet big insiders are slowly rotating and selling their shares off. And then we have this bad news and we could see this potentially roll over and we go into something much bigger. How deep? I don't know, but it's definitely some damage has been done to the charts and we could see some trend reversals this week depending on how the next couple of days perform in terms of various assets, sectors, trends on the short term and momentum, all of that stuff in the next few days. Now, a whole bunch of different questions here. I know a bunch of traders ended up going short, bought inverse ETFs and loaded up with 3x inverse ETFs, expecting the markets to fall, which I talked about in my last video on Friday, not to do because this market could put in a significant bottom and the trend technically hasn't changed. If we go back here, we still have green bars. The longer term momentum, this wave is still up. The market simply had a sell-off on news and it could totally recoup and go again to the upside. And just as a reminder, if you like these videos and you want to support my channel, I'd greatly appreciate it. I do these to share and let people understand how the markets are moving, why they're moving, the short-term overbought, oversold conditions, the long-term trends for gold and the indices. I share my opinion, what I think is going to happen, and I also kind of layer in what I'm actually doing. Big difference between the two sometimes. Might sound bearish, although we could be long and riding this market higher. The key is for you guys to listen between what I think is going to happen and what we're actually doing. But again, if you like my channel and you're learning something, you find it useful, please subscribe. Please share with your friends who you might find this useful as well. Thank you. So again, those of you who are trading inverse ETFs and piled in, you're probably deep underwater today and under some pressure. And that's simply, in my opinion, that is just a gamble. That is somebody trying to make fast money. You're using leveraged ETFs and you're shorting into a dip. In an uptrend, you buy the dips, you don't sell short. And just because news hit the market and drove it down doesn't mean it's going to change the trend. It could just be a blip and this market keeps going higher, just like we saw over here. We saw a 2-day sell-off and then boom, the market ends up running it significantly higher to the upside. So again, if you've been taking an inverse ETF trade, while it may pan out and you'll look like a superhero, it is still a full-on gamble trade, in my opinion, trying to identify when a trend changes and you're shorting at a cycle low, at an oversold condition, at support, based on news driving it in that direction. So you're feeling the pressure now if you did get short on Friday, even at the open today if you got short and you're still holding it. And hopefully that pans out for you, but the trend is still intact and to the upside. So just be aware you're on the wrong side of that trade at this point. If we take a look at where money was flowing today, majority of the money was flowing into small caps. If we look at the IWM, we saw small caps have a big recovery there. When we go and look at the sectors, we have retail was one of the strongest sectors today in terms of the core 11 sectors. It pretty much negated all of the Friday tariff news. Of course, retail, almost everything comes from China, so they were hit the hardest. And I think there was more news around that. Of course, it's recovered very quickly, right back like nothing happened. And retail is going to be very sensitive to this. You'd almost think the insiders knew 4 days in advance, big volume, that there was going to be tariff news and probably made some pretty good money when the news hit and or really kind of played all that. It's always interesting to see how the market moves ahead of news and positions itself for it in some cases. Now, if we go take a look at some of the other places where money's been moving, we do have the dollar up 0.2% or 0.3%. It's building another launch pad to potentially go higher. Now, typically, if chaos is about to hit the stock market and we are going to go into a bigger, more crazy type of market condition to the downside or economy, worse, like a weakening economy, the dollar usually rallies. So we saw the dollar move higher today. Gold and silver also moved higher. Let's actually go take a look at gold, up 3.25%, popping and really moving. Now, we did have the trade in just a bonus trade. This is not our long-term positions. This was just a trade to get in, make some money on it and get out. We had this trade. It came right up, hit our measured move and had that sharp bout of selling, which is a good sign. That means the technicals were dead on. We literally sold right at the high, then the market had a pullback. But we're in the phase, as we've talked about, this was simply a trade. This was a short-term trade, long-term investment capital in gold. I'm still long, still hold all my physical because we could go into a big blow-off move. And if we take a look at this pattern here, we never know where we are in this cycle, but we have the 2007 on the left. We did have a big day of selling back over here while gold started to shoot higher. Well, we just had a big down day in gold, in the stock market here. And gold is shooting to all-time highs, just like we saw over here. Then the market had a bounce the next day, the next week, which here we are now. The market's having a bounce, and we got this. And then after that, gold continued to shoot higher while the stock market actually sold off 20%, over 20%. So that's the big question. Are we going to start to see the stock market start to go and sell off? And gold can still have this great big shoot, this big pop and rally and be favorable. And of course, that's what I've been waiting for. And as many of you know, I'm looking to actually sell some of my physical gold, actually almost all of my physical gold. I do have some other small pockets, but the majority of my physical gold, if we do see the stock market surge and take off to the upside and the stock market starts to break down in a big way, that will be my warning sign that I'm probably going to want to trim off my gold positions, physical gold, lock in some pretty big profits since 2019. And then as the stock market corrects and sells off, and gold, silver miners, and platinum and palladium and all that stuff probably sell off together for a while, I can then repurchase and get back into the precious metal space for a longer term play once again. Anyway, if we dive into, let's take a look at our trading strategy here. We are very close to a trend change, and one of the members wanted to know, is that going to trigger us out of the ban strategy? Why is It will trigger one trade in the band strategy, our SSO, our two leveraged ETF. So if the S&P 500 has a trend exit signal, we'll close out SPY with our ACS strategy. We'll also close out our SSO, the 2x leveraged ETF in the band strategy. But we'll continue to run with the QQQ. We'll continue to run with our XLC trade and let those continue to play out and mature until the NASDAQ trend actually comes to an end. Then we close the NASDAQ QLD and we close out any sector trades that we have open. And another member asked if it was going to get us into another gold trade. No, this quick 15%, this is very low risk, high probability 15%, we just nailed it, was just that. It was a trade. It was a high probability move. Some of you, for some reason, have this confused, thinking that I got out of all my gold. This, I don't know how much more clear I can be. This is a discretionary trade, a side bonus little trade to make some money, lock it in, move on. But I still hold my gold from going all the way back to 2019 when the new bull market started in gold. And I continue to let this rocket higher. And who knows where gold is going to top out in the next month or so, or a couple of weeks. Could top out at 4,500, could top out at 5,000. Either way, don't get confused. And this is the one thing that I do, I think, a lot different than maybe other people on newsletters and all of that stuff, is I cover multiple time frames. So if I'm talking short-term trades, you've got to focus on that. If I'm talking long-term investment positions, you have to understand those two because they're very different. I can be closing out a gold trade right now, but still bullish, really bullish on gold because I'm expecting my long-term, my big position in gold and silver to continue to go up. But I wanted to squeeze a little profits out of a high momentum trade like I did. So that is very important. And unfortunately, I see that in the comments. Most people just can't keep up with the time frames that I do, and I probably aren't crystal clear. Although if you watch me every day, you'll get the gist of it, of what I do. Last but not least, if we take a look at the rest of the sectors, the top performing sectors, the same ones. We got silver, uranium, clean tech, base metals, silver, copper, gold, lithium, blockchain, marijuana, gold. So we definitely have a very similar group, highly speculative, moving fast. Money is piling into this space. This is what we talked about last week, over a week ago. We're going to start to see increased volatility. Well, we're getting big gaps to the upside. Price is getting hammered. We're getting gaps to the upside and running. You look at all of these, uranium, doesn't matter, clean tech, huge run-ups and sell-offs and massive gaps to the upside. Volatility, like we're looking at 6-7% swings on a daily basis with massive volume that dwarfs everything else. These are all warning signs that everybody's chasing this money around and they're running for the door to get out one day and they're piling in the next day. It's just an emotional mess. And it's a feeding frenzy. The question is, where is the top? When is the top? But all the signs are leading that we're getting closer. We're like looking at potentially just weeks away. 2, 4, 6 weeks of higher metals and maybe some speculative plays. And then they could roll over. The stock market could roll over at any point and start to head south. And we just need to be aware of that. Anyways, that's it for now. We'll talk to you soon. Bye-bye.